Well, this is quite bizarre. Just a few hours after we chatted about Binance, the SEC has officially sued Binance yet again, filing 13 charges against Binance entities and founder CZ. We're going to go through the press release, we'll look at a little bit of the actual legal complaint, and then what we'll do in this video is we'll talk about some of the other background, like the Commodity Future Trading Commission's lawsuit against Binance, and some of the other history that we know about CZ, and how maybe CZ and Binance control a lot more of the Bitcoin marketplace than people would like to think. In fact, this lawsuit just hit from the SEC, and we basically got an instantaneous red candle here on a Bitcoin. We're down 5.2% in the last 24 here. Strong down candle, still within this trading range if we were to extend this down. So we still haven't broken that range. If we pull this out a little bit, we're bouncing off of that range. But boy, if we break past this this range here, would be about our 25.7-ish level. Wouldn't be too great. So let's see what happens. But for now, let's take a look at this lawsuit first. So this is just the cover letter here. Very similar to the CFTC. The SEC's lawsuit essentially alleges that Binance in America, without registration, sold unregistered securities. In fact, the second half of the entire section of the SEC lawsuit basically just breaks down the top 10 cryptocurrencies that were for sale without registration on Binance. And they actually go pretty deep. Well, I mean, for the SEC, I actually thought they did a very impressive summary of each of the different coins here. For example, or coins or tokens, whatever. For example, you want to learn about Solana? The SEC on page 88, 89, 90, 91, and the first half of 92 gives you a complete breakdown of Solana. You want to learn about ADA on the Cardano blockchain? 92 to 93 to 94. Want to learn about Matic and Polygon? What about Axie? Remember that one? Or some other coins? Algorand, Decentraland? They're all in here. Kind of incredible. The second half of the SEC lawsuit is really just giving you a summary on all these different coins. It's quite interesting. But it also shows the SEC is not just targeting Binance, but also is clearly trying to establish the precedent that all of the different ones mentioned, they're coming for you. They're coming for you too. Just kind of scary. But anyway, notice actually, wait a minute. I wonder, did they though mention Bitcoin? See, we know that Binance controls about 80% of Bitcoin transactions, but wait a second here. We know they call BAM Trading and the BNB coin securities. We know they're alleging over here Solana, we've got ADA, we've got Matic and Polygon in here, we've got Filecoin in here, we have, ooh, this is kind of juicy. Notice Ethereum BTC not in here. We've got Atom in here, we've got from the Cosmos, we've got, let's see here, Sand on Ethereum, on the Ethereum blockchain. Interesting, but not Ethereum itself, eh? Mana for Decentraland is in here, as an example. Algorand is in here. Again, we had Cardano earlier. There's Axie, which that was a scam. Then you've got Cody here. Then we have Binance through BAM Trading. Then it goes into Binance and BAM again. Fascinating. You actually don't have BTC and Ethereum in the listed securities as examples of securities in the SEC lawsuit. Maybe this is almost a way of the SEC suggesting that maybe these are commodities and letting the CFTC handle these crypto assets, so to speak. They give some definitions of Bitcoin here, and they do reference Bitcoin, but they do not, fascinatingly, give Bitcoin as an example of a security. In fact, here they reference, when they talk about the Cosmos Hub, about how basically the Cosmos Hub could be a bridge to Ethereum and Bitcoin, digital assets, but not that those are securities. Boy, that now makes me want to jump over to the Commodities and Future Trading Commission lawsuit, which is right here. And I wouldn't be surprised that the SEC and CFTC Ah, look at this. I bet you they collaborated, because look what we have over here. Digital assets that are commodities, including Bitcoin, Ethereum, and Litecoin. Wow. Look at how these agencies are trying to separate this. They're basically saying Bitcoin, Ethereum, and Litecoin are commodities. And all the other ones, Matic, Polygon, well, obviously that's on the Polygon chain, Solana, Cardano, ADA, in other words, all of these, those are securities. Interesting how they are coming at Binance from both angles. There's no overlap now in these lawsuits. The CFTC can go all in on suing Binance for selling unregistered commodities, Bitcoin, Ethereum, Litecoin. The SEC can go all in against Binance for promoting Binance token and these other unregistered securities like ADA, Solana, Matic. Wow, that's actually a really big deal. And quite frankly, in the course of just filming this in the last 6 minutes here, I just realized how they segmented this out. And that is actually a very big deal, because now you have the SEC and CFTC finally saying, we'll take these, you'll take those. Wow, this is incredible. Anyway, so beyond that, then of course we get some talk about how basically Binance US was basically just a shell for a Binance, and that CZ had a lot more control than people think. Here's an organizational chart. I actually recommend that you pause and screenshot this, because I think it's really interesting, because it shows you basically how Zhao owns all of this stuff, whether it's Binance, Binance US down over here, or look at that, CoinMarketCap right over here. Fascinating. I think some of the most interesting comments that came out of my read of the lawsuit, though, had to do with this Tai Chi plan. And basically, the Tai Chi plan was this intentional setup of a U.S. entity to purposefully, quote, reveal, retard, and resolve enforcement tensions at a U.S. entity that would keep them separated from Binance. So basically, the Tai Chi plan was like, yeah, let's create a US version, and let's let that one take the fall for all the regulation. In the meantime, let's throw up claims that the Howey test, which evaluates securities, are going to hold up in our way, even though we don't expect that they will. And even though we'll say you can't be a US user on the actual, Binance network, we'll just go ahead and find ways to allow VIPs and other individuals that we want on the platform anyway to essentially bypass these terms of services by asking US users to use a VPN. Very similar allegation as in the CFTC lawsuit. But again, this is groundbreaking here about how they're separating the clarification of these securities tokens, or whatever you want to call them at this point. But not a good day for Binance. Here's some more on background on Binance and the CFTC lawsuit. Before I get into that, quick reminder, I've got amazing courses on building your wealth down below, so if you like my perspective, check those out. Get life insurance by going to metkevin.com/life. That's a paid promotion. Great product. You can Apple Pay or Android Pay in as little as 5 minutes. And of course, get yourself 12 free stocks on Webull by going to metkevin.com/free. That's metkevin.com/free. Also paid promotion. A good old esteemed CZ is apparently considering selling out of at least a lot of his ownership of Binance. How convenient. Right as all the vultures of regulators are coming in and circling around the rat that is CZ, all of a sudden, CZ wants to get out. What a surprise. What a horrible surprise. Actually, it's not really a surprise at all. Now, obviously, Binance survived last year's insanity and madness, which other crypto brokerages did not. A lot of them went down. But a lot of folks have been asking, hey, Kevin, why recently has it seemed like the stock market has been doing so well and Bitcoin has not? It's returned pretty decently year to date. We're at 26,700 right now, up from that 16,000 level. But why has it felt like it's been sort of bleeding out in the last few weeks as the stock market's been rallying on AI and otherwise? Yet a lot of folks believe that this has to do with lower trading volumes at Binance, as potentially, well, the regulators are coming in. not only is it likely that the regulators are coming in, but there's a pretty big piece in Reuters that just came out a couple hours ago touching on how Binance, potentially through their Binance.us arm, operated bank accounts here that they weren't supposed to and utilized loopholes to basically have direct control of customer cash, which would be big no-nos for a company like Binance. On top of that, you've got plenty of arguments right now being made that basically CZ's getting ready to, well, let's just say, make a run for it. And this is not a surprise. We've seen this CZ guy, supposed founder and majority owner of Binance, refuse to come to the United States for fears of being arrested. Super sketchy interviews he's had on CNBC alleging that, oh, don't worry, our assets get audited. We're good. And then it's like, well, what about your liabilities? Nope, we don't audit our liabilities. Don't worry, though. Our assets are great. And then, of course, they make this argument that all of our coins are backed by cash. But then what has secretly come out is that you're using the same basket of cash to back multiple different tokens. So it's like, yes, if one token withdrew all of its money and needed all the cash backing it, that would work. But then that would leave all of the other tokens not backed by cash because you're multi-counting. And because you're multi-counting is exactly why you don't want to audit your actual full company. Because your proof of reserves audits, which are just single glimpses of asset checks, first of all, your auditor quit because y'all are probably a blatant fraud. And second of all, people are like, nobody believes these reports anymore. Anyway, I'm obviously pretty bearish on this guy. And so now, apparently, look at this. Binance's regulatory woes pave path for CZ's heir apparent. In other words, because the regulators are coming in, CZ wants to dump out of Binance and pick somebody else to run the company. Now, of course, they'll spin the narrative and be like, oh, we want to show that we're turning a new leaf. But really what it is CZ's going to make off with Billy's. And yeah, anyway, let's see what we got here. In mid-May, cryptocurrency exchange Binance got some bad news in the far-flung corner of the sprawling universe. Binance payments partners were cut off in Australia. We saw a lot of this cutting off by other banks as well. Binance is really losing a lot of its on and off ramps. And so now you've got someone new, this guy Richard Tang. Hold on a sec there, Bloomberg. There we go. Richard Tang. This guy might end up being the front runner to take over as CEO. And this is being speculated on specifically because of the regulation that's circling around basically Zhao's home over in Dubai. And even though they're trying to take this argument of, hey, we're a tech company, you know, we move fast and break things, in the finance space, you have to be really, really careful. And so they're trying to basically put this new figurehead in to try to show or prove that this is a reputable company and that they're willing to work with compliance authorities. Now, apparently, what's wild is that according to the Financial Times, in another piece over here, Binance, which the Financial Times says has no headquarters at all, controlled 57.5% of the average volume of the world's crypto exchanges at its peak in February. Now they control about 43%. That's still a lot, but I remember one of the moments we actually just recently popped to a new high at Bitcoin, I think where it was right around 30,000, was when Binance decided to move money they had, about $1 billion they had in stable coins, into Bitcoin. And so at one point, the Financial Times in a separate piece had also argued that Binance controls 80% of all Bitcoin transactions, which is also pretty remarkable. You've got CFTC lawsuits against Binance, and actually I think I have the piece the Financial Times based this off of right here. This is Morgan Stanley. You know, I don't really love Morgan Stanley. I remember talking about this when we reviewed this last time as well. But they talk about Bitcoin. Here it is. 81% of BTC traded on exchanges in February was traded on only one exchange, Binance. Our conclusion is that traders on Binance now set the daily price for BTC. I don't disagree with Morgan Stanley on this. Now, I disagree with a lot of things, but I don't disagree with this at all. And they also talk about how stablecoin market caps have actually, with the exception of Tether, fallen on average about 16%. And so some softness happening here in the crypto space. You know, the meme coin game is still alive and well, but something to pay attention to, because a lot of the regulators are swarming in now, or as they quite frankly should, on stable coins. Mostly because, and I've made this argument for years, that I believe that stable coins are inherently unstable, and that's why they offer these larger yields, because we don't know how many times this money is rehypothecated and who owns, you know, the debt. Unfortunately, the problem was, you know, I thought stablecoins might collapse, but brokerages would survive. The opposite happened, right? A lot of the brokerages fell, and some of the stablecoins actually survived. Although we did see some pretty big blowups. With all this said, the Rolling Stone magazine actually just put out a big piece on CZ. I think it's worth looking at. Let's take a look at what the Rolling Stone has to say. So, crypto's richest man is waiting out the chaos. CZ has always avoided the spotlight, but after SBF's extraordinary fall, all eyes are on crypto's mysterious kingpin. And so I went through this article already. I'm not going to read this whole thing because it is quite extensive, but I did highlight a section here that I thought was interesting. Binance has been hit with this lawsuit by the CFTC in March, alleging a massive scheme to intentionally evade U.S. laws. And it's worth bringing this up. I actually have the CFTC lawsuit. It is right, yeah, it's a 74-page lawsuit. It's actually right here. One of the things that you find that Binance, according to the CFTC, was really good at was basically teaching people how to set up VPNs to bypass laws to be able to invest in Binance from jurisdictions they're not supposed to, whether that was mainland China, or the United States, or otherwise. And they basically call Binance's compliance programs ineffective, and they have a pretty thorough case here and make some pretty strong allegations against Binance. For example here, Binance intentionally tried to hide the scope of its compliance program ineffectiveness from its business partners. At one point, Binance purposefully engaged another compliance auditor that would, quote, just do a half-assed individual sub-audit on geofencing to buy us more time. And I think that's kind of been the thesis here of BZ, is like, or BZ, CZ, and Binance is like, let's just keep kicking the can down the road until we're fully flushed out. In fact, you even have CZ here replying, I think it was CZ. Let's see here. Lim, who was aware that Binance did not have a board of directors, nevertheless assured her, yeah, it's fine. I can get management to sign off on the fake report. Around the same time as the referenced half-assed compliance audit in November, an individual explained, okay, so not CZ, an individual exclaimed to Lim in the chat, I has no confidence in our geofencing. They also talk about Hamas transactions being facilitated, like buying AKs, and basically laundering money on Binance, and how basically Binance just closes their eyes to questionable services. Like, for example, they would teach people when they were associated with questionable purposes to, quote, come back with a new account. This current one has to go. It's tainted. Yeah, it's tainted. So anyway, but that's because offboarding is viewed as bad in CZ's eyes. In other words, we don't want to see terrorists leave Binance because that's going to lower our numbers. It's really kind of like one of the most disgusting companies that I think could possibly exist that still exists. And that's not to say that others were any better. I mean, we've already seen there have been blatant frauds, rug pulls in crypto, brokerage frauds. There's been so much fraud in crypto. It's been disgusting. I feel embarrassed that at one point I thought, even 3% of a portfolio going to crypto was remotely reasonable. Obviously, that's not like personalized advice for people, but I was never a big like, oh, all in crypto or whatever. But I mean, some of these things are it's just crazy how this organization still exists. But anyway, let's see here. Forbes had an expose on CZ. Fine. Okay, we already know that. I want to go to, there was another section here the Rolling Stone had. So they talk a little bit about how basically he can live nowhere but anywhere. Binance's role in evading regulators, moving assets for criminals and sanctions evaders, and hiding basic financial information. There's actually talk about people using Binance to bribe Russians during this whole Russia and Ukraine disaster, which is not great either. Murky divide between Binance and Binance US is part of what has regulators worried. Well, they're probably, if it's anything like FTX, they're probably really one and the same. And I think that's why they're getting sued by, the SEC and the CFTC. But anyway, what CZ, in fairness to them, what they're trying to do is they're trying to set up this idea that, hey, they're going to focus more on compliance, and they're just going to say that anybody who says anything negative about them is just fudding or fake news or whatever. Fine. Okay, whatever. Everything I'm saying is just my opinion, whatever. Who cares? So anyway, there are some really red flags when you look at Binance. Like, if you buy on Binance, I would just be a big fan of taking my money off the exchange. Not your keys, not your crypto, right? But anyway, I think it's very interesting that they want to focus so heavily on compliance. This is what CZ tweeted at the beginning of the year. And I think this is consistent with their move of really trying to get a new CEO, because CZ is tainted. So what they're trying to do is they're trying to get this new guy, Richard Tang, to basically be this fill-in with a cute resume that could oversee Binance and hopefully get them to be regulated. I have to say, Kevin O'Leary, in my interview with him, had a really great point, and he suggested that Binance is likely to continue to get squeezed into jurisdictions that aren't regulating them, and they're going to see the jurisdictional pressure come from all angles until they're really only able to operate in very, very few areas. But even those few leftover areas will eventually squeeze them out until they're either forced to comply or go bankrupt. He had a very great argument. Just type into YouTube, meet Kevin O'Leary, and you'll see it. I thought he had a really great argument. And I think so far that's playing out to be true. So I think if it is true that Binance is controlling about 81%, at least as of February, of Bitcoin volumes, in case you're wondering why Bitcoin is falling, I think the frank bottom line is because Binance is starting to falter. And the more BTC falls, the more, in my opinion, it's actually evidence of BTC faltering. Sorry, not of BTC faltering, of Binance faltering. And the more you see pain at Binance, the more, in my opinion, you'll end up seeing pain in Bitcoin, at least until the issues resolve themselves. So we'll see, but that's just my take. Now, I want you to know this. When it comes to AI, time is what's going to make you money. And if you can prove that value to an employer, you'll always be able to be employed. So this is another way of making sure that you don't get replaced